That's the parabolic part of this process, where we start worrying about availability of silver. Not how much do you have to pay for it, but can you get any at all? And then, the industrial players who need silver, like the solar panel companies, have to get it at whatever price. And then investors who don't have enough silver catch a serious dose of FOMO, fear of missing out, and they start buying. And this little thin market goes straight up. So that's where we get triple-digit silver, which I think we will get. $100 silver is coming. So, mixed feelings about a correction in the next 6 or so months. It would hurt if you've got a lot of precious metals already. But it's also maybe the last buying opportunity in this cycle. And you should take advantage of it when the time comes.
While gold's record-breaking rally has dominated the headlines, silver may be on the cusp of taking center stage. Analysts suggest that the white metal is gearing up for a powerful surge to all-time highs, fueled by persistent supply deficits, rising industrial demand, and increasing investor interest. Silver remains significantly undervalued despite climbing 14.5% year-to-date, slightly outpacing gold's 14.4% gain. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, remains above 90, well above its historical average of 70. This wide gap indicates that silver may be primed for a catch-up rally. The Silver Institute projects that 2025 will mark the 5th consecutive year of a silver supply deficit, even as global silver production reaches an 11-year high of 1.05 billion ounces. However, with projected demand at 1.2 billion ounces, supply will still fall short, driven by both industrial consumption and investment inflows. Silver's unique dual role as a precious and industrial metal sets it apart. Silver's widespread industrial applications provide a built-in demand floor, unlike gold, which is primarily sought for investment and jewelry. This helps support its value even during economic expansions when traditional safe haven demand might soften. John Rubino highlights silver as the story ahead, as the current monetary dynamics signal a looming currency death spiral for major fiat currencies. He predicts that as the silver supply tightens, the focus will shift from price to availability. Silver could enter a parabolic rise at that point, ultimately reaching triple-digit prices. Rubino is confident that $100 silver is inevitable. It's only a matter of when the right dominoes fall. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
In the first 5 months of this fiscal year, the U.S. took on a record amount of new debt, and we're on track for $2 trillion plus deficit this year. And it's peacetime. We're not in a war. We don't have any gigantic crisis going on out there, but we're running crisis level deficits at the same time that the interest on the existing U.S. debt is going parabolic. We're above $1 trillion a year just in interest right now, which of course has to be borrowed, which raises the future deficit and so on. So we kind of, you can make the case that we've entered the currency death spiral for the world's big fiat currencies. And that would explain aggressive gold buying out there, because anybody who understands monetary policy and can read a balance sheet or look at a chart of U.S. debt and understand what it means in relative terms to the past, they kind of want real assets, So maybe they're going to buy Bitcoin, maybe they're going to buy gold, maybe they're going to buy oil wells or farmland or whatever. But you want stuff that is not vulnerable to a currency crisis that occurs when a country's debt just spins out of control and they have to devalue their currency really aggressively in order to prevent a 1930s style Great Depression. And so the people who trust the currency are the ones who get screwed over. You don't want to be one of those people. So you buy gold. And that's a big part of what's happening now too. Now, silver might be the interesting story now going forward, because it's done really well lately too. I don't remember what the time frame was, but I saw somebody saying that silver has gone up slightly more in percentage terms than gold has in this period. I don't remember what the period was, but lately silver's been doing just fine. But it's still very cheap relative to gold. The gold-silver ratio is in the high 80s, low 90s right now, which is normally a ratio that is a buy signal for silver and either a hold or sell signal for gold. So it could easily be that silver is going to start its big run now. In every precious metals bull market, gold goes up and it goes up and it goes up, and silver languishes for a little while. And then towards the end, everybody starts thinking in physical terms and envisioning, say, a Krugerrand, which is a small gold coin. And then they look at 75 silver ounces sitting on a table and how gorgeous that would look and how much silver you get for that 1 ounce of gold. And they switch to silver, so silver buying goes through the roof. It's a super thin market. The paper market in silver is a fractional reserve banking system where the leverage is like 100 to 1. So it doesn't take a lot of buying of silver to basically just tap out the COMEX and the London Metals Exchange and the other places where there's supposed to be physical silver waiting to be picked up, and when that happens, that's the parabolic part of this process where we start worrying about availability of silver. Not how much do you have to pay for it, but can you get any at all? And then, the industrial players who need silver, like the solar panel companies, have to get it at whatever price. And then investors who don't have enough silver catch a serious dose of FOMO, fear of missing out, and they start buying. And this little thin market goes straight up. So that's where we get triple-digit silver, which I think we will get. $100. Go back to the peak of the last bull market in precious metals. Silver is way below its peak, while gold is 50% up from its peak. There's no reason for that because the industrial demand for silver has been going up dramatically. So the silver market is in deficit and has been for the last few years, where the world's silver mines aren't producing enough silver to satisfy industrial and investment demand, which means we're using up the silver stocks that we've had above ground, wherever they are in vaults around the world. Nobody knows exactly how much silver there is out there that's available, but we're using it up. Wherever we started a decade ago, a lot of it is gone now, and a lot of it continues to be taken off the market. As long as the industrial demand for silver stays high and silver's price relative to gold stays low, then it's a decent buy. It's something that there will be dips, but the dips are to be bought in a market like that. So whatever happens with silver in the next few months, if you've got a lot of precious metals already, but it's also maybe the last buying opportunity in this cycle, and in part because gold just broke through what ought to be a serious resistance level. 3,000 ought to have a lot of people stacked up right there wanting to take profits. And that hasn't happened yet, although Friday was a pretty hard day for gold. Same thing that we were talking about with oil. If we're tipping into a recession, then inflation hedges are less interesting for a lot of people. And that could be a reason for a big dip in gold and silver. So it's not just a straight shot to the moon, or at least it very seldom is in a bull market. So expect sometimes stomach churning corrections as this goes on. And just, I would just advise keeping your eyes on the prize, which is, gold, $10,000 or so an ounce, and silver, a couple of $100 an ounce as this really plays out. That's what it's going to look like when we finally do the currency reset. And in the meantime, there will be all kinds of manipulation and all kinds of corrections and spikes. And, it'll be a very volatile market. No individual correction is a 100% buying opportunity. Do not use the next drop in gold and silver to put all your money in. Continue to add gradually over time, but just add a little more if you get a really nice correction. But you never know what the next correction will be after that. So you don't want to 100% invest in precious metals or anything else. Gradual buying, dollar cost averaging is what we still should be doing, with a little bit of bias towards the upside when there's a correction. So anyhow, long-winded answer for what is very simple investment advice. Keep stacking.
Silver has often been overshadowed by gold, especially with gold reaching record intraday highs 15 times this year. However, the white metal may soon take center stage in what one analyst describes as a powerful rally to its record high price. Several key factors are driving silver's momentum. The most significant is gold's historic surge past the psychologically crucial $3,000 per ounce mark. Meanwhile, mounting supply deficits, rising industrial demand, and renewed investor interest set the stage for silver's potential breakout. Analysts suggest that silver could soon play catch-up with gold, offering substantial upside potential for those paying attention. What price target do you have for silver in the next 12 to 24 months? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.